Ever wondered how Vietnam, a small country in Southeast Asia, has managed to catapult its GDP in recent decades? This is a story not of sudden transformation, but one of strategic moves and calculated risks. In the late 1980s, Vietnam found itself at a critical juncture. The country's centrally planned economy was stifling growth and discouraging foreign investment. Recognizing the need for change, Vietnam's leaders embarked on a path of economic reforms. They began to shift away from the rigid structures of a centrally planned economy, opting instead for a more flexible, market-oriented approach. These reforms allowed the country to tap into its full economic potential. They opened up the Vietnamese economy to competition, encouraging efficiency and innovation. Businesses now had the freedom to plan, invest, and grow. At the same time, the government maintained a steady hand on the economy's helm, steering it towards stability and growth. The effects of these reforms were soon felt throughout the country. Economic growth accelerated, creating new opportunities for businesses and individuals alike. The reforms boosted productivity and wages, lifting countless Vietnamese out of poverty. But perhaps the most significant impact of these reforms was the surge in foreign investment. Vietnam's shift towards a market-oriented economy sent a clear signal to the world. The country was open for business. Investors, both local and foreign, were drawn to the newly liberalized economy. They brought with them capital, technology, and expertise. This influx of foreign investment acted as a catalyst, sparking further economic growth. The economic reforms of the late 1980s set the stage for Vietnam's impressive economic performance in the decades that followed. They laid the groundwork for a vibrant, dynamic economy, one that is capable of adapting to changing circumstances and seizing new opportunities. Thus began the journey of economic transformation that would soon see Vietnam emerge as a global economic contender. The awakening of the dragon had begun, and the world was beginning to take notice. The late 20th century marked a significant milestone for Vietnam's economy with the liberalization of its trade regime. It was a turning point, a definitive shift away from economic isolation towards a more global outlook. This period saw Vietnam embracing the world stage, ready to participate in the grand economic dance. In this dance, Vietnam's partners were many. The country signed free trade agreements with a host of nations, a move akin to extending a hand in friendship and cooperation. These agreements, in essence, were promises of mutual benefit. For Vietnam, they were the keys to unlock the potential of its exports, allowing the country to tap into vast foreign markets. Then, a pivotal moment arrived in 2007 when Vietnam joined the World Trade Organization. This was not just a membership, it was an affirmation of Vietnam's commitment to international trade rules and standards. It was a declaration that Vietnam was ready to play the game by the global rules, ready to compete on the international stage. Joining the WTO did more than just open doors. It spurred Vietnam's economy to greater heights. It bolstered the country's exports, allowing Vietnamese goods to reach more corners of the globe. The world began to take notice of Vietnam, not just as a market, but as a competitive player in the global economy. But the effects of trade liberalization went beyond numbers. It created a ripple effect, boosting other sectors of the economy. It helped foster a more competitive business environment, encouraging innovation and efficiency. It attracted foreign investors eager to tap into the potential of this emerging market. In essence, trade liberalization was a catalyst, setting off a chain of events that propelled Vietnam's economy forward. It was the opening of gates, the beginning of an economic journey that continues to unfold. Trade liberalization laid the groundwork for Vietnam's integration into the global economy, setting the stage for its next big move. And as we will see, this was just the start of Vietnam's remarkable economic transformation. Foreign direct investment, or FDI, has been a cornerstone of Vietnam's economic development. It's like a magnet, attracting resources from across the globe and channeling them into the Vietnamese economy. But what exactly makes Vietnam so attractive to foreign investors? A key factor is Vietnam's youthful and burgeoning workforce. With a median age of just 34.5 years, Vietnam has an army of young, energetic individuals ready to contribute to the economy. This youthful vigor, coupled with relatively low wages, presents an enticing opportunity for businesses seeking cost-effective labor. Furthermore, Vietnam's strategic location, perched on the edge of the Pacific Ocean and nestled among economic powerhouses like China and India, makes it a prime location for businesses seeking to expand their global footprint. This prime positioning allows companies to tap into the booming Asian markets while also providing easy access to the rest of the world. FDI hasn't just filled the coffers of Vietnam, though. It's acted as a catalyst, boosting exports and creating jobs. Foreign companies setting up shop in Vietnam often bring with them advanced technologies and practices, which can lead to increased productivity and competitiveness. Additionally, these companies create jobs, helping to reduce unemployment and raise living standards. But the benefits of FDI extend beyond the immediate economic boost. It also encourages the transfer of skills and knowledge. As foreign companies operate in Vietnam, they train local employees, improving their skills and increasing their productivity. This not only benefits the individual workers, but also contributes to the overall development of the Vietnamese economy. Moreover, FDI can stimulate competition within the local market. As foreign companies enter the market, local companies are forced to innovate and improve in order to stay competitive. This can lead to improved products and services, benefiting consumers and driving economic growth. In short, FDI has been a key driver of Vietnam's economic transformation, turning it into one of the fastest-growing economies in the world. The influx of foreign investment not only boosted Vietnam's economy, but also paved the way for its next wave of development. The lure of foreign investment, it seems, is a powerful force indeed. Infrastructure and education have been the twin pillars of Vietnam's economic strategy. It's a strategy that is paying dividends. A robust infrastructure is a backbone to any thriving economy. Understanding this, Vietnam has poured significant resources into creating a network that facilitates trade, transportation, and overall economic activity. With new roads, bridges, ports, and airports, the country has improved connectivity, bridging the gap between rural and urban areas, as well as integrating Vietnam more seamlessly into the global supply chain. At the same time, the Vietnamese government has taken a forward-thinking approach to education. Recognizing that a nation's true wealth lies in its human capital, it is heavily invested in creating a more skilled workforce. By focusing on improving the quality of education, the government has nurtured a young, dynamic, and educated population. This investment in education has not only helped to create a highly skilled workforce, but has also fostered a culture of innovation and entrepreneurship, which is vital for an economy in the 21st century. From tech startups to manufacturing industries, the country is seeing a surge in businesses driven by this new generation of well-educated and ambitious individuals. These dual investments have also enhanced Vietnam's business environment. With solid infrastructure and a skilled workforce, the country has become an attractive destination for both domestic and international businesses. The improved business environment has in turn fueled economic growth, creating jobs and increasing living standards. But the government isn't stopping there. It continues to focus on infrastructure development and educational reform. With plans to further improve road networks, increase power generation, and enhance digital connectivity, Vietnam is future-proofing its economy. Similarly, in education, the focus is on improving the quality of vocational training and higher education, ensuring that its population is ready for the jobs of tomorrow. Investing in its people and its infrastructure, Vietnam has laid a strong foundation for its future growth. In the coming years, we can expect to see Vietnam continue to rise, powered by its infrastructure, education, and the enduring spirit of its people. Finally, Vietnam's youthful population has been a key factor in its economic success. Let's dive into this fascinating aspect of the nation's growth story. Vietnam's demographics have been a source of strength for its economy. With a median age of just 34.5 years, the country's population is young and growing. This youthful vigor translates into a dynamic workforce that is not only large in numbers but also eager to learn, innovate, and contribute to the nation's economic development. Vietnam's young population provides a competitive advantage in terms of labor costs and productivity. Young workers are typically more adaptable and quicker to learn new skills, making them a valuable asset in a rapidly changing global economy. Furthermore, the lower wages associated with a younger workforce make Vietnam an attractive destination for businesses looking to reduce costs without sacrificing quality or productivity. But the demographic dividend is not just about numbers and costs, it's also about the energy, ambition, and creativity that young people bring to the table. Vietnam's youth are not just workers, they're also consumers, entrepreneurs, and innovators. They're the ones driving demand for new products and services, starting new businesses, and coming up with fresh ideas that can fuel economic growth. Moreover, the Vietnamese government recognizes the value of its young population and has made significant investments in education to ensure that these young people have the skills they need to succeed in the modern economy. This focus on education has resulted in a more skilled and productive workforce, further enhancing Vietnam's competitive advantage. In conclusion, Vietnam's youthful population is a powerful economic asset. Their energy, creativity, and ambition, combined with a government committed to their education and development, make for a potent mix that is driving Vietnam's rapid economic growth. With a youthful and dynamic workforce, Vietnam is well positioned to continue its economic ascent in the years to come.